G'day everyone, welcome back to Pete's Investing. This is a US Canadian dollar currency update. On the weekly we're in a bearish mode, on the daily we're in a bullish mode, and on the hourly we're in the middle of a bearish divergence, and I'll go through each of those. So first off, on the weekly you can see there we're still in a bearish mode on our indicators, in particular our oscillator down here. But let's have a quick look at the Fibonacci's on this. So if we look at that low to that high, you can see there it's sort of just bouncing off or playing around the 38%. It's bounced off there almost 3-4 times, so it's sort of still struggling to get below that. So that's currently the weekly trend in a bearish mode. On the daily, you can see there it's bounced off this key support at 131.39, and it's bounced up and hit this through this ascending diagonal, but hit this descending diagonal, and it's now making further advancements in that little range there. But again, on the daily, our oscillator is showing a bullish momentum. On the hourly, you can see there we hit a couple of divergences in the past. Just historically, there was a bullish divergence there that was hit during that period there. A little bearish divergence more recently that started turning down on the CCI, and we would have entered that somewhere probably on that one. That hit our target there. That's why you always choose the closest Fibonacci range when choosing these targets. Don't try to get too ambitious, because it may just reverse like it did there. And more recently, we didn't catch this one in time. It was probably done during after hours or when I wasn't paying attention to the charts. But that's something that was missed on that one. You can see there was a bearish divergence down to that point there on the CCI versus a bullish divergence on the price chart. Now you'll notice also that happens to be that descending diagonal line where it bounced off, and that correlated with this bearish divergence. So that's still in play possibly. The way you actually know that would have probably broken through our target. So we choose the range to trade between that divergence range. So you probably would have gone as low as that bar there. So you would have entered it once it broke below this channel, and which happens to coincidentally be also this ascending diagonal support line. So that would have been your entry point, and your target would have been from a recent Fibonacci low. So your target would have been the closest Fibonacci range, and I would have picked probably that one had I been watching this at the time at the 38%. But in this case it went as far as the 61% and starting to bounce from there. So it's probably too late to gain from any down price decline from there. So that's where we are at the moment. It's a bit undecided at the moment in terms of the overall trend. The weekly and daily are giving us conflicting signals. So we probably need to see it break above this descending and ascending diagonal and break into this area to be more confident, and for the weekly to then start turning into a more bullish scenario. So to understand how to trade using the trend following analysis method, subscribe to my Patreon page, where we also look at weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.